PSA did it again. That's right, price increases. PSA just increased their prices, and we're going to break it down. We're actually going to go through the financials of PSA, what they have been previously, what we can find that's publicly available, but then we're going to project that out based on today's volumes and also prices, and anticipate and project what is PSA's actual profitability and how profitable of a company are they with all these different revenue streams that they've generated over the past couple of years. We're just going to see just how profitable of a company that they are now that they're increasing the prices on everything and they're just taking money away from you. So we're going to break it all down, let you know what this means for you, the collector, flipper, or investor. All right, guys, of course, as always, please like, subscribe, share. Definitely appreciate it. There's a lot of things that PSA is doing nowadays. They're increasing prices on their trading cards. They are authenticating cards at eBay. They are now giving you the ability to actually grade cards through eBay authentication program. Of course, they're vaulting cards. What else are they doing? They're selling stuff out of their team store. They're collecting memberships. They're also coming out with their new Gamestop Power Packs. So that's just around the corner. So what does this mean in terms of profitability? What does this mean for all the delays? What does this mean for increases in prices? How does that impact you? Well, let's just get to the nitty-gritty of all this. The cause for the increases in prices is obviously an increase in demand for trading cards, specifically one cohort. That's TPG grading. So, of course, volume at PSA is going to be the #1 driver for prices. You can't get mad at PSA because more people keep submitting cards and throwing money at them. That means that they're going to increase their prices. It's just good business. Whenever there's such a high demand for a product and a service, of course, that means that the person who is selling that product or service is going to raise their price to modulate demand. They've got more cards coming in. They're currently a month behind on just checking in cards, whereas just a couple of months ago, maybe 6, 7, 8, 9, 10 months ago, we were maybe getting cards delivered door to door in maybe 6 weeks. So now it's taking 4 to 5 weeks just to check cards in, just to get them into that order prep stage. PSA and Collectors Universe as a whole is really doing an entire shift in terms of how they're targeting you, the customer, and how they're monetizing you, the customer. This increase in price is them trying to squeeze a little bit more revenue out of you. They're shifting from unit throughput to monetization per customer and ecosystem expansion. That's the main revenue drivers for PSA nowadays. It's not to try and get increased volume. They are expanding. You'll be able to see that they are expanding, but now they're trying to figure out ways in order to grow revenue. How is it that they can monetize the consumer more so than just grading their cards? So we're going to dig into that just a little bit. So let's just take a peek at my outstanding orders and just show just how much of a slowdown has actually happened with PSA. You can see the delay. I mean, we're looking really at around 3 months in most cases for any type of value bulk service, and that's just not acceptable. It's not acceptable from a submission standpoint. It's not acceptable from a customer standpoint perspective. They really are pushing that 65+ day turnaround time, and sometimes they are exceeding that threshold. Most of the time they do come under it, but still 65 business days is just not really that acceptable. Whenever we have, as collectors, have filled out survey forms over and over and over saying that we want increased turnaround times. Of course, PSA is doing everything they can to increase turnaround times to the best of their ability, but people just keep sending cards left and right in mass volumes. If we look at overall volume, you can see volume by month, PSA continues to increase volume on a per month basis in a linear fashion. They are the only grading company that is scaling at this pace. They've opened numerous facilities. They've gone international. I just don't see how much more of this they can continue doing, as there are some limitations as you begin expanding at this rate. Nonetheless, they are still expanding. Look at the PSA grading trends. Right now, the trailing 30 days, we're at 1.6 million cards. That is absolutely insane. The pace now puts them on roughly a 21 million cards graded annually pace, which is, again, just mind-boggling. Pokemon has dominated. TCG has dominated the past 30 days. They've dominated the past 7 days. So overall, the increase in volume has been tremendous. We're seeing tremendous growth, mainly coming from TCG and Pokemon. It's a Pokemon world, and we're all living in it. If you just want to see what are some of the big trends in terms of overall volume by set, You don't even really see any type of sports card product until the bottom of this list. I don't even know how far this down this is. Again, they're just getting flooded with Pokemon, so Pokemon is contributing to all the volume, and that's really, really, really unfortunate. Obviously putting a lot of pressure on PSA from a volume standpoint, and in order for them to really modulate that volume, they have to increase prices. Very unfortunate. Interestingly enough, PSA did not modulate prices for Pokemon. Due to high demand, estimated turnaround times and prices have increased for select service levels. With PSA estimated turnaround time update, we're seeing continued high demand for our authentication and grading services in 2025, and we're grateful for your continued trust and patience. Submission volumes are at unprecedented levels, and we have made the difficult decision to increase estimated turnaround times and pricing for select service levels effective for orders placed on or after Thursday, September 25th, 2025. We are actively working to improve estimated turnaround times, keep you informed, and set clear expectations. What to expect for cards. You can see every single service level has increased in their expected turnaround time, and of course the price increases. Increases across the board, increased expectations and wait times, but the most important note here, trading card game bulk pricing remains unchanged. Absolutely unfortunate. You can see dual service impact has also again been impacted negatively. Not only increase in turnaround times, increases in prices, just not good across the board. You can see behind the scenes, we're expanding the team, onboarding new graders, process, blah, 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 blah. We're working hard. We're trying to solve the problem, but you all keep sending us stuff to get graded. And that's kind of why we're in this predicament, is because people just keep sending in stuff nonstop. So what does the price increase mean? Continued decreases in turnaround times, but volume help may come, because if they're increasing prices, then the thought may be that we're going to see decreases in volume, or very well could be that that slight increase in $2 is not going to do any volume because it's not impacting TCG, it's only impacting sports. Margin pressure on PSA slabs. Well, increases in prices doesn't necessarily imply margin pressure, but it's just an indicator that there's increased volume. We have more volume. That means more slabs out there in the market. That means increased margin pressure for the most part, all cards, with the exception of the really good cards. So you can expect ROI to decrease for the average card because there's more slabs out there. Increased buying competition in raw market. So because there's higher volume, then theoretically there's more people buying cards to submit to PSA to get graded, and as a result you can assume that there's increased buying competition in the raw market for all the cards that I target. I certainly see that. It's certainly getting more difficult to get cleaner raw cards on eBay, and I'm also seeing competition for what does become available. It is getting much more difficult to actually lock those cards down. But what this implies, most importantly, and this is a standalone video on its own, not a topic I want to get into necessarily, but there is a significant need for a solid second third-party grader to emerge in this market. We need the Pepsi to PSA's Coke. We need the Wendy's to PSA's McDonald's. We need the Whataburger to PSA's In-N-Out. We need PSA and Beckett. We need Beckett. The market needs another third-party grader to emerge, because we cannot be beholden and enslaved to PSA in terms of turnaround times and prices and resale value and collectability. We just need another third-party grader. Volume is one of the most difficult challenges that PSA has certainly addressed and continues to address. They haven't solved the problem yet because the demand is far outpacing what they can do, but they're working on it. But they're also working on a couple other aspects of the business, and it's something that once you get into the end stages of your industry where you're trying to build out an entire ecosystem, what you're really trying to do is you are trying to re-monetize your customer, or monetize them in new ways, new novel ways. So you already have this customer base, you already have this collectability moat that is the PSA brand. How is it that you can take on additional revenue streams from those customers and increase your overall margins and increase your overall revenue and increase the overall profitability, and as well as the value of your business in the event that you wanted to sell it potentially and retake it public? Could that be what they're doing? Let's just dive into this thought experiment. Pushing volume higher has input limitations, labor, facilities, equipment, all these things. You have to build this stuff out. You have to find people to hire. You have to build the buildings. You have to get the equipment in order to get volume. And that just takes time, and it also has stresses, has geographic limitations, etc. So CU is now seeking to expand its revenue per customer. How are they doing that? We know that PSA, or better yet, Collectors Universe, was a publicly traded company at one point, and as a result, all publicly traded companies have their documents available and open to the public via SEC filings. So if you go look at their previous annual reports or any of their financial statements, we can actually dig into those statements. And the last public one that I could find occurred in 2020, if I'm not mistaken, 2020, 2021. So what we're going to do is review those financial statements, and we're going to extrapolate the revenue, expenses, operating income, the EBITDA, earnings before income tax, based on volume expansion, and also the average revenue per item, the ARPU. So how much does it cost to grade an item? Obviously, it's changed since 2020 to now. So we're going to make a couple assumptions and see if we can determine what their profitability of PSA actually is. We'll see. Collectors Universe had a total revenue of $79.9 million and operating income of $14.1 million, roughly about an 18% operating margin. You can see the breakout of how they made their money. Most of it was coins at the time, so roughly 41.6 million, or roughly 53% of the business was dominated by coins. Trading cards and autographs really was not the bread and butter, although it certainly is now. Trading cards and autographs, 33.7 million. Total items graded in that year, 5 million. I want to say I saw figures that maybe they were grading around 250,000 cards per month at the time. Does that sound right? I have to go back and double check, but overall 5 million total things that were graded. Average fee per item was $13.98. Coins averaged $18. They are higher than the cards and autographs. Of course, that's completely changed. PSA graded roughly 1.5 million in September 2025. According to Gem Rate, their recent pace of 20.3 million items annually. A simpler annualization of September 1.56 times 12 gives 18.7. So they're going to use roughly 18.5 million as a conservative base for how many items that PSA grades on an annual basis. And this is trading cards, right? Take a peek at what the previous financials were, the financial statements, versus what's publicly available today, and using a couple assumptions, we can actually come up with some pretty good numbers here. So if we look at total revenue, using some assumptions of growth, overall revenue of the company is projected to be roughly $570 million. So again, that's driven by PSA volume, an increase in the average revenue per unit. So that's the average price of cards that are getting graded. The assumption is $25. Cost of revenue, $31.6 million. The assumption that's roughly 40% of sales that occurred in 2020. If we fast forward that to 2025, it's roughly 37%. There's going to be a little bit of economies of scale that have been gained and some efficiencies that have been gained, especially through some of the technology advancements, etc. So per card labor, shipping, materials, efficiency gains, automation, scanning, AI triage, offset wage inflation. So again, we would expect cost of revenue to have decreased some materially in some way. So the assumption is 37%. Gross profit, 47.3 million in 2020. Fast forward to 2025, the modeled out gross profit, 360 million. That's insane. Operating income, 14.1 million, which is again the 18% number that they had in 2020, of 125 million in 2025. Interest expense. So there is going to be some interest expense because Nat Turner and company obviously bought this. They likely have some interest debt on this, so there's going to be an expense to that. Pre-tax income back in 2020, 13.8 million. Pre-tax income 2025 projection 110 million. You can see taxes, net income number. So the net income number is essentially 84 million. That is just tremendous. It's over 8-fold higher than what it was in 2020. Obviously, PSA has expanded tremendously in terms of volume, but how is it that they can go about re-monetizing their customer? Because they've done that tremendously through increasing prices, increasing volume, so they're getting more money per customer just through grading their cards and increasing their prices. What else are they doing? Well, let's just take a look. What do they do now? Well, they definitely grade your cards. They sell you memberships. Now they sell your cards via eBay consignment model, so they're obviously going to be doing that for a fee. So if, again, you send cards to PSA, they're going to say, hey, we will sell those on eBay on your behalf via PSA consignment model or partnership that we have. Just keep your cards here in the vault or sell directly on eBay, and boom. Of course, they're going to be collecting a fee on that. They authenticate your cards. Well, they've been doing that since 2023, and of course they did not jump into this with the expectation that they're going to be authenticating for free. So eBay is clearly giving them some type of fee, but of course PSA was thinking ahead. They just wanted the cards to flow through their offices because eventually they're going to do something that is going to be very enticing for us collectors, which is try and get cards graded while they're in your hands. Buy/vault your cards, and tomorrow are they going to ditch eBay? How much eBay is paying PSA currently to authenticate their items, and also how PSA may increase their revenue by offering to grade cards that have to go through eBay authentication. How does this impact volume, upselling customers, and overall financial projections, along with the previously mentioned eBay consignment business and any partnership deals that they may have where PSA is buying cards directly from submissions on behalf of third partners? Excellent. In order to estimate some of the additional revenue streams that they may be extracting from you and thus remonetizing you, let's take a look at eBay authentication. Out of every PSA card that is sold via eBay sold completed listing, roughly 14.7% of those sold PSA slabs go through eBay authentication because they have a value greater than 250. Obviously, PSA is going to be getting money from eBay authenticating the item, so that's going to be on a per item basis. PSA is also going to be getting money by selling you the ease of grading, by reducing the friction of submitting cards to PSA. So right now, I can submit cards to PSA, I have to go to the post office, I have to print out forms, yada, yada, yada. Or I gotta drive down to my local GameStop and interact with some broccoli-haired zit-faced kid who just may steal my stuff, and who knows after that. Or you can just, as you buy cards on eBay, as they flow through the eBay authentication desk, which happens to be in PSA's office, who would have thought, click a little button and say, hey, I'll pay a little bit more for a premium add-on service so that I can get my card graded at PSA while it's going through authentication. So obviously they're going to be upselling you grading services through eBay authentication, and they are doing so at a premium cost because the cost to do this is substantially higher than had you just sent the cards in on your own. Interesting. So that's going to equal some money. And then of course they're going to have their eBay consignment or vaulting service fees. This is how the model projected some of the revenue and how it's going to impact overall financials. The proportion of those PSA slabs that go through eBay, 14.7%. PSA has an authentication fee of roughly $5 per authenticated item. PSA is going to convert 10% of those, so 10% of the people are going to click the extra button to add on their service and thus grade their card. The fees to grade are considerably more expensive. So this is not going to be perfect. It's just a blended ARPU of $58.40 per item that goes through PSA's eBay authentication and is thus graded by PSA. Consignment, it's estimating roughly $37.5 million. Vault is generating roughly $10 million, and partner programs is generating roughly $5 million. So with this model projection, we're now looking at total revenue of roughly $680 million. An operating income of $189 million. As cards go through eBay authentication, PSA is going to snag a couple of those because people hit that extra button to pay for grading while it goes through eBay authentication. That conversion of the number of people clicking that button is going to be between 5 and 15%, so the base case is roughly 10%. This is where they're really targeting in terms of just the overall boost to their operating income. This table here is now going to break down where PSA is getting their revenue across all these revenue streams that we've talked about, from grading your cards to authenticating your cards via eBay authentication, to grading additional premium volume through eBay authentication by having people click an extra button, via also the eBay consignment business, how much money they're generating from that, also the vaulting and custody, as well as any money that they're getting through the partner purchase transaction programs where PSA is giving you offers. Those offers come from third-party people. Presumably those third-party people are having to pay PSA the ability to be a partner and get access to these cards at such discounted rates, and or they're just the margin that PSA would make if they just buy the cards and then sell them on their own, potentially via Power Packs, which I don't have fully modeled into this. However, this is where all these assumptions come in. The assumption is that PSA is generating roughly $567 million from grading cards. That's just crazy. Their operating margin is 22%. From authenticating cards, and again, this one may be a little off, we're looking at about 27.9 million in revenue, a very high operating margin business. It's something that the PSA would be inclined to continue to focus on. The premium grading, eBay authentication flow, looking at 32.5 million in revenue, 45% operating margin, very high margin because the price is a lot higher. The eBay consignment business assumption is roughly 5%, roughly 37.5 million, very high operating margin. Vaulting custody, we're looking at 10 million. Partner purchase transaction programs, 5 million. So total, with this scenario, we're looking at roughly $680 million in revenue, and we're looking at an operating income of roughly 188 million. That's absolutely insane. If we look at how this compares to 2020, so whenever Nat Turner and company bought this company in 2020, you can see what company they were taking over based on the SEC filings, right? So since that occurred 5 years later, let's look at the financials and see what has this company become and how much has it grown, not only through trading card grading, but also the additional services that it built in that are very, very high margins. The core grading membership coins business has increased. This is not a total. This has increased from 2020 by $489 million. That incrementally increased its operating income by 111 million. The consignment business, the vaulting business, and the partner flows business, that all is contributing roughly another 50 million. The eBay authentication fee and services that did not exist pre-2020, they were started in 2023, that's going to throw in another 20 to 30 million. They say 27.9, it's going to be another 20 to 30 million. The premium grading, so this is segregated out from the total grade. This is the premium grading through eBay authentication. The PSA is projected to get roughly 32.5 million in the total uplift. So the total increase from 2020, Nat Turner and team have essentially increased the revenue by $500 million a year. They've increased their operating income by 175 million per year, and they've increased their blended margin by 9.7 points. So if we did a comparison of 2020 versus 2025, you can see their total revenue essentially increased 762% from 76.9 million to 680 million. Their operating income increased over 1,000%, 1,200%, mind you, from 14.1 million to 188 million. The operating margin increased from 18% to 28%. It increased over a third. The EBITDA from 18 million to 210 million, again over 1,000% increase. And the enterprise values, again, they were bought out in 2020 for 850 million. The company now, this is roughly about a $3.1 to $3.2 billion company. So this is an incredible turnaround. We've essentially increased the value of this company almost 4x, 3.5x just in 5 years. So that begs the question, okay, what can PSA continue to do as we start building out this ecosystem or continue to build out this ecosystem? Obviously right now, a lot of what they have is reliant on eBay. So one of the most logical things that PSA could do to reduce all sorts of friction is once they get the cards on their desk, they own everything after that. They obviously own the grading aspect. They own the resale aspect. So instead of relying on eBay and having to pay eBay a cut, they've essentially grown this business and grown this consignment model on the back of eBay. They can stab eBay in the back and say, we're going to start our own marketplace where it's called PSA Exchange, where it's a direct resale or it's direct power pack or it's direct pack on our website. And they capture all the transaction fees instead of having to split it with eBay or split it with GameStop, etc. Lending and collateralization, so they can monetize PSA slabs as financial assets. I don't really recommend this because PSA slabs are very volatile, and we saw how that happened in 2021, 2022 when the market tanked. A lot of people can get whacked and really wiped out. These are not necessarily stable, but if they're risky and they're feeling like they would like to do that, they could. Insurance products. This is actually genius. There's a couple of different options out there in the marketplace for insurance, for collectibles insurance. who better to provide collectibles insurance and get into the collectibles insurance business than PSA? And let us not forget, guys, I mean, this kind of rolls into what I think that PSA has been wanting to do all along, is if they're not going to have their own marketplace, they can certainly create their own slab packs. They see what Arena Club's doing. Why not just create their own packs? Ultimately, that's PSA's end goal. They want to control every aspect of the customer experience once the card leaves the pack. And honestly, it's genius. You really can't blame them for it. As much fraud and waste as there has been, it makes sense for PSA to be the entity to create the ecosystem to just dominate this space, from not only the people who are submitting cards to be graded, but authenticating cards on whatever platform, to owning the resale platform, to reducing the friction. Ultimately, the ROI shrinks along every single step because it gets more expensive, including even having to have cards graded directly from eBay purchases, etc. But they are essentially dominating and vertically integrating every single aspect of how cards flow through the marketplace. It's genius. Unfortunately, we are having to pay due to all of this operational build out and ecosystem build out. And there's pain points, and then it means increased prices. That means higher turnaround times or longer turnaround times. It means that we're not going to have anything slowing down anytime soon, because PSA is going to continue to build out this ecosystem as much as possible. I don't really blame them. It does highlight significantly, going back to a previous point, we need another third-party grader to come into this ecosystem and into this hobby and compete. We greatly, greatly need this. But hope you all enjoyed this. Let me know what you think, and we'll see you next time.